Alright, so let's look at day 17 of my stock market portfolio. If you look at my QUESTRADE account, look at positions, Exxon Mobil dropped below the price that I bought it at. And if you've been watching my previous videos, you saw that it went all the way up to $79 or even $80, but I didn't sell. But that's normal with stocks. It goes up and down. But in the long term, it goes higher than what you bought it at, and that's when you sell. Ford, same thing. I think it almost reached the price that I bought it at, dropped even more. It's at $10.26 now. The $500 that I sent to my RSP account arrived, but I had already an order on Ford to buy options of Ford, so that went through. So I bought Ford options at $1.55, 2 contracts. So what I like about options is that so the returns with options are higher. You could double your money easily. If the stock increases 10%, the equivalent option will increase, let's say 50%. So that's why I like trading options. But of course it's riskier because you're limited to a time period. If what you think is going to happen, what you predict is going to happen, does not happen within that time period, you lose your money. With stocks, you're not limited to a time period. While you're waiting, you're collecting dividends, and you could wait as long as you want to sell. So now with my available balance of 583 Canadian or 454 US, I might buy either some more Ford options because it's going lower, or thinking of buying Walmart, but I feel like 500 is not enough or 400 is not going to make a difference. Let's say I buy Walmart at 87, it's trading at 87 right now. Let's say I sell it at 100. 14% times 450, let's say, minus 450, so that's $67 minus fees, $57 on 450, 12%. I mean, it's still a profit. Yeah, so maybe I'll buy some more Ford options, or maybe I'll buy some Walmart shares. If we look at my Investors Edge account, Canadian side, Cenovus Energy 941, Enbridge, which is killing me at 40.4. I bought some more at 42. HBC at 949, it's killing me. I bought at 13.50 about a long time ago. But I'm not worried about Enbridge. I mean, it's got the 4th highest market cap on the Canadian Stock Exchange. It's not going anywhere. It's just a buying opportunity. Look on the US side, I got General Electric that I bought at 17. Also killing me, it's at 14. Kraft Heinz that I bought at 75, it's at 66. And New York Mortgage Trust 550, I bought at 6. If I do a screener on, if I filter on stocks over 900 billion on the Canadian stock, 900 million, sorry, on the Canadian Stock Exchange, and then stored by market cap. So Royal Bank is the biggest with 114 billion. Then you got TD with 107 billion. Bank of Nova Scotia with 74. Very pissed because I wanted to buy it at 75 or 75.50. I put an order at 75.50 and it dropped to 75.51. So I missed out on it by a penny. Now I think it's trading at 79 or even higher. And Enbridge, there you go. Enbridge is number 5. It used to be 4th. Now it's 5th with 53 billion. So it's a company you can trust. I mean, it's above BMO, Suncor, CIBC, Bell. So yeah, I'm not worried about Enbridge. I'm just disappointed that I bought it too high. I'll just have to wait longer. I mean, even Warren Buffett says that when stocks go down, he just sees it as a buying opportunity. He's not worried about the short-term fluctuations. He looks more at the long-term growth. He says the general direction of a stock is to go up. So when they go down, it's just an opportunity to buy some more. But then eventually, either if it's 2 years or 3 years, it's going to go back up and you're going to be making a profit. You're going to be investing your money in the best way possible.
I never know what markets are going to do. There's never been a time in my life when I know what markets are going to do over a long period of time. They're going to go up. But in terms of what's going to happen in a day or a week or a month or a year even, I've never felt that I knew it, and I've never felt that was important. I will say that in 10 or 20 or 30 years, I think stocks will be a lot higher than they are now.
You know, I know you look at things like that, but I also know that you look at stocks and try to decide if they're fairly valued, if they're overvalued, if they're looking cheap at this point. And we have been waiting for a correction for an awfully long time. That's finally come. Do stocks look cheaper to you, just based on where we've come?
Well, anytime stocks go down, as far as I'm concerned, I like it because I'm a net buyer of stocks. I've been buying stocks ever since I was 11 years old. So when stocks go down, it's good news, just like when hamburgers go down.
So he's a net buyer of stocks, so he keeps buying stocks as he goes, and whenever they go down, he buys some more.
It's good news, or Coca Cola goes down, it's good news in terms of anything I buy. But you know, stocks are going to go down. You could probably look it up as to what percent of the days since I was born they've gone down, and maybe it'd be 30% or something like that. And you can't predict what stocks will do, but in short run, but you can predict that American business will do well over time. And just take the 20th century. Stocks went from 66, the Dow average, 66 to 11,497, and you were getting...
Now, if we do a screener on the US side with market cap greater than also $1 billion, let's see what it gives us. Apple has the biggest market cap. Then you got Google, Amazon, Facebook, Berkshire. So there's my Exxon Mobil that I bought at 75. So this is a great buying opportunity. 316 billion market cap and 10% down for the year. So Exxon, Walmart is a great opportunity also. I think it's trading at 87 right now. Yeah, 87. Days range is 87.24. Chevron Corporation, 10% down for the year, 9% down. AT&T, 7% down for the year. Procter and Gamble, definitely a good buy. 14% down for the year. So yeah, so I'm probably gonna put an order on either Procter and Gamble or Walmart or Ford options, but to not put everything in one place. I already own Ford shares in my TFSA, 235 shares, about 2,500 book value. So it's probably best to diversify, and I guess let's see what Procter and Gamble is trading at. 78, 52 week low, 77.92, pays 3% dividends. How much does Walmart pay in dividends? Walmart pays 2%. So let's say buy Procter at 78, let's say sell at 90. That's 15%. So if I go back to my RSP, I got 454 minus 5 divided by, because I'm buying a US stock, I have to look at my US equivalent. So it's 454 buying power. So so 449 divided by, let's say I put an order at 78. That gives me 5 shares that I can buy of Procter and Gamble. Let's see what the option looks like. See, when I trade options, I go for long term, the longest period possible. So 2020. So that means my option will expire January 17, 2020. So that gives me 2 years. So I predict that in 2 years the stock will go up from the price that I buy it at. So I pay a premium for that option, and if it goes above my premium, then it's a profitable trade until it reaches maturity. Because of time value, when the stock goes up and down now, it's going to affect the price of my premium. So I can sell my premium. And so I'll make a video, more detailed video about options another time. Now 2020. So if I look at the 80 strike price, it's at, yeah, it's too much. Okay, forget it. Yeah, all right, can't afford it. So let's stick to stocks. 78. Today's low was what, 78.42. So I'm gonna put, how much did I say? I think I said 5 shares. So buy 5 shares at 7 good till canceled. RSP, Procter and Gamble, buy. So that's 390 US. So I'm trading 400 US. 15% of 400 at $60. Yeah, I'm not sure it's really worth it. I think I'm better off buying options because there's more room to grow. Yeah, I think I'm gonna stick to options. So let's look at Ford options. I've done good with Ford options in the past. The 987, it's trading at 140. I'll probably put one at like 110 maybe. So what is my buying power? 454. So I could probably buy 4 contracts. It's trading 140 and 160. So I'll do like 110. How much does that give me? 454. Yeah, I should be good. Let's do good till cancel. 110. That's 440 US, 453. So right on the money. Yeah, that makes more sense for me. 5 ones. Okay, so 4 times 110 times 100. So I'll buy 4 for January 17, 2020, 97 calls at 121. Alright, send order. You buy to open 4 at 110. They already bought some at 155. So I'll average it down to maybe 125 by placing an order at 110 if it goes through. If it doesn't reach 110, well then I don't have to buy because it's not far enough from my 155. But 110 is far enough from my 155, so for me it would be a good reason to buy some more. So yeah, so in terms of buying opportunities, well, you've got Walmart, you've got Procter and Gamble, you've got Barrick Gold on the Toronto Stock Exchange, you've got Sanofi, you got Victoria's Secret, L Brands, which I mentioned yesterday in my video. Crazy drop. Day's range was 41. Wow. Pays almost more than 5% dividends. Maybe I should put an order on that actually. Let's look at the options on L Brand. 42.50. Wow, ridiculous. That's expensive. That means it's going up. What if I buy L Brands at like, I don't know, 42? Sell it at 50. So 50 divided by 42, 20%. I would like to buy L Brands. The problem is I don't have enough Alright, so American Express, if it drops again below 88, now it's at 93. Kraft Heinz for sure is a great opportunity. 66 at that price even. USG, it's a Warren Buffett holding, so definitely USG. Walmart I mentioned, GE, Enbridge, Ford, Facebook, in the 170s. I think it's a great price compared to the 52-week high. And Exxon Mobil, of course, definite buy. Alright, so that was my portfolio for the day. As you can see, everything dropped, but as long as I don't sell, I'm not losing. You just gotta be patient. If I have more money, I can buy some more. So if you have any questions, leave them in the comments below. If you can open an account with QUESTRADE, please use my referral code at the bottom of the video, so we both get up to $250. If you enjoy my videos, please like, share with your friends, and subscribe to my channel. Thanks for watching.